Hello, investors. We are communicating to you a little differently this time. This is a Zoom call which I have recorded for you, and this is being sent to you. Uh, well, this is a different month in many respects. I guess most of us are at home in quarantine. There is this new threat that we've had for the last few months, and we are all coping with it. Even the markets, I guess you must have seen the headlines. It's been a very, very difficult month. It's been a month of record fall in global markets. Markets fell almost 40% max during this period. And we've had a fall in India. Um, the fact is that the portfolio also has taken a hit. It's never good or never enjoyable losing money. But the silver lining is that in this fall also, we have made sure that the losses are not large. So we have fallen less than the index. We have fallen less than most mutual funds and other PMSs. So that is a satisfaction that, though, as I said, losing money is never fun, but at least we are in very good control of your portfolio. And during this phase, we are very active because we have raised cash levels. Number two is we are also reorienting to those sectors or spaces which we think will be the future winners and help us to recover. So let me share with you our thoughts of what business, economy, and markets and virus is going ahead. As I've said earlier that I am no expert or no scientist. We really don't know the end game. But the thing is that the next 2 months we think are going to be very, very crucial because the intensity of the problem has hit everybody. So testing is something which is getting rampant. Isolation, many countries were in denial. India is ahead of the curve. So we feel that the next 2 months will see the flattening of the curve. Flattening of the curve obviously is not the solution. It just buys us time. The thing that I look at with a lot of optimism is science. I feel what will get us out of this whole problem is scientific breakthroughs. And the world's money and scientists are at it. At some point in time, I think that in the short term, an antiviral, and there are a lot of combinations being worked about, you're reading about it, can be a game changer. Because the interesting part is that this virus is not very lethal. Unfortunately, it seems to attack some people more severely and they get into a problematic area. Virals are all around us. We are living with it on a day-to-day basis. The problem is that we do not have any medicine which can be the game changer. I personally think that in the short term, this is going to be the game changer. This is going to be the game changer for all of us in our personal lives, our businesses, and markets. The thing that I look at, greatest hope in this whole play, is the discovery of some existing medicines which will work. And from my reading, I think science or the chemist are very, very close to such breakthroughs. So I keep my fingers crossed and I hope that earlier rather than later, we make some breakthroughs here. Third is the fact that herd immunity. A lot of people are getting this virus, they're getting cured, and they're moving on. This develops immunity. And as a society, ultimately, when society develops immunity or a herd immunity towards a certain virus, uh, these things come and pass rather than be a full stop, which we are experiencing right now. The fourth is weather. Of course, a lot of people think that weather will not affect. But having seen a lot of virus cycles in the past, having studied them, we realize that there is an element of seasonality to it. And we know that summers, fortunately, are coming, at least in India and in the Western world, it will be in about 2 to 3 months. So I feel that this also will be a positive factor in the whole progression of pain that we are in right now. And finally, obviously, is the long-term solution, which is the vaccine, which is a fair way away. It is a final end game, which is 12 to 18 months. But I personally, if you ask me, the thing I would really keep my eyes, ears open for is point number 2, which is the discovery of a current medical formula or any cocktail which could work. And this would take away the fear and panic. More than the number of deaths, more than the number of cases, the fear and panic that you experience is so high. And that is really what is taking a toll of our lives, physically, mentally, emotionally. and for markets as a whole, because markets ultimately are a reflection of the underlying economy and the play out that is happening. I had shared with you earlier that we have studied viruses in the past, and this is the SARS virus that happened in 2003. We notice, or we find a trend, that as and when the number of cases peak, this becomes that point which becomes a turning point for markets, for business, economy, and fear. So what you are seeing globally is that all countries, whether it's China, Korea, even Italy, that there is an absolute vertical increase in number of cases. And beyond that, the number of cases start plateauing and declining. So we are experiencing similar situations in the US right now, which explains the global panic. And I think in the few weeks ahead, we will experience it in India also. But whenever there is this vertical move or this point of maximum panic, what follows beyond that is a de-acceleration. And linked to that is what you see even in our markets. The red line representing the increasing number of cases. So the moment the number of cases spike or become maximum, this is when market bottoms are in place. That is why I said that the next 2 months are going to be challenged. Because as the number of cases in the world go up exponentially, you will have points of maximum panic, points of maximum volatility. But from these points, we have seen in the case of SARS and others that markets reverse and go on to make new highs. So what I feel is that we are going to be tested, all of us, on not just markets, but many more areas the next few weeks to 1 or 2 months. But I think these also are points of maximum opportunity and inflection in markets. Another thing, which is, of course, a massive pandemic that had happened, was the Spanish flu. The numbers today are nowhere a decimal of what it was then. So here also you will see that the number of cases in the panic flu just shot up dramatically. And post this absolute spike in numbers, you will find de-acceleration happens. And this, when linked to the markets, shows you that this makes a bottoming formation. And post that, markets recover and are able to take out new highs. So I also think that this time we would have a similar situation where we could have a period of maximum pain or maximum incremental number of cases, which could play out in the next few weeks. And post that, once numbers plateau out, or there is de-acceleration, which we are seeing it in China, Korea, Italy, Singapore, I think that the game will play out globally. And that will be the major turning point or point of inflection for markets. And markets have fallen. One is the problem with the virus. Second is the economic impact, you will say. The fact is that yes, it will have a long-lasting economic impact, but the markets have already discounted it. Global markets have fallen 40%. So markets have come to where they were 5 to 6 years ago. So the markets have given up or discounted 4 to 5 years of growth. So yes, there will be an economic impact, and that is why markets, stocks, and prices are where they are. You will find that the best of quality stocks are also down 50% in a matter of 1 month. The reason is that people have factored in whatever, whether you call it a recession or any other term you like to give it. We don't know the outcome, whether it will last a few weeks, a few months. But the fact is that the markets have discounted, and there is a belief that things will get hit. That is why the pricing that you are seeing is inbuilt in what you see on the screen. This is an interesting chart, and this is something I would like you to pay attention on. That this is the volatility index, which is called the VIX index. This is also a representation of fear. You will see that in 2000, this VIX index generally goes up to 50, where the black horizontal line is, and comes back under normal conditions. Only once it has gone higher than that to almost 89 was in 2008. This was the financial crisis. And the second time it has happened right now. But you will notice that from these points of maximum pain and panic, you have the genesis or the start of a very large bull market. Post 2008, from 2009 to 2014, that is for 6 years, we had a consecutive massive bull market. I'm not predicting a massive bull market because I know that your mind is not ready to accept. But history and data shows us that from these points where everyone is thinking of redeeming, exiting equity, blaming equity and asset class, blaming everybody, you find that these are the points when markets give you also the best returns. So if you have liquidity, if you have time on your side, if you have that kind of ability to give it some space and time, I think that this is the best time for equity, though your mind and emotion will not agree. But history shows us that this is what really happens. Another time in history was the 2000 bubble of the IT bull bubble. You'll realize that even at that stage, post the market bottoming it out in 2002, from 2003 to 2008, we had one of the biggest bull markets in our recent times. So the seeds of the next bull market are sown in the previous bear market. And what we are experiencing is a bear market right now with this level of fall. However, it is now that the seeds of the next bull market are sown. How much time it will take and when it will start, of course, it is very subjective because the enemy that we have, the virus itself, is very subjective. We don't know the end game. But the important part is that this is the time when you must not panic. You have taken the pain in the short run. You need to give it some space and time and see it play out, because this historically has shown us at those points in history when the best investor returns follow. Even in India, we have, as I told you, seen a 40% decline in the markets in the last month and a half. However, when I go back and study, and this is in relevance to what I am doing with regard to your portfolio, we have seen that whenever markets are fallen, like in 2008, you will see the red circles, which the markets have a declining tops, or what we call a case of lower tops. However, at some point in time, the markets do a basing formation, which you see in that red big circle at the bottom. And from here, the markets go on to make higher tops. This is nothing but a case of steps that are coming down and steps that move up. But the important part is that when markets turn around, the bull market that you see is phenomenal. To give you an example, in 2009, the markets moved up 70% in 1 year. So that is the extent of the rally or the turnaround that happens, because our markets are like a spring. You compress it, but when you let the spring go, it tends to bounce back. So we are at that phase. As I said, we don't know the time frame, but what I am looking for is to deploy. We are sitting on cash in your portfolio, to deploy that at a suitable time. Because the beauty is that post that we feel that the markets can have the same spring action and we can see a dramatic and very fast recovery in your portfolio. So yes, there is pain, but do not panic, because history shows us that this too shall pass. These do not go on for infinity. In fact, these are the seeds of the next bull market are always sown in the previous bear market. The same thing we saw in 2000, which I pointed out earlier, that markets, when they decline in one step lower. At some point in time, they start making higher steps. And when that happens, the turnaround that you see in the market. So coming to the current situation, you will notice that we fell from around 12,000 to 7,500. So in the short term, the focus point is 7,500. And we feel that 9,000 will be an area. So the markets will meander between these 2 points. And when they break out on either side, I think we will get more clarity with the direction. In the next few weeks, as I said, which will be the point of maximum fear, pain, and increasing number of cases, you will see both these levels get tested. You will see volatility. But when a breakout happens on either side, I think you will get clarity as to the next phase. And that is when we will look to deploy your money. So this is really the market as a whole. But what is really happening, or what we are studying and seeing, and more importantly, what we have done with your portfolio, is that we had sold some stocks earlier. I've mentioned about L&T, which happened way earlier, maybe in Jan. PVR was another stock which we sold at 1,700. Now it's around 1,000. As I told you, we had done stress tests. And as of just a day or two earlier, we have also sold another stock in your portfolio called Axis Bank. So what we are doing is we are trying to analyze that those companies that are likely to be beneficiaries post this phase of difficulty goes away. So we have reallocated money towards pharma. So today, pharma is our second largest sectorial allocation. We have bought Abbott and Ipca, and we are still sitting on certain amount of cash. So going ahead, we feel that we will have new realities, new business opportunities, because this thing will, and what you see on your screen is the template of what we are following. So the issue of localization, digitization, cash is king. So you're going to see, a lot of new realities that work out. We are very, very focused on your portfolio. We are not sitting like an ostrich with our head in the sand, but we are actively monitoring your portfolio. Our aim is to reduce risk. As I said, it is painful to lose in the last month, but even in that month, you will realize that we have lost less than the market. And more importantly is we have generated cash and we are redeploying the money into those sectors or themes, because when markets turn, I want to be in those sectors and themes which make disproportionate returns. And that is the best strategy for a portfolio recovery. I've been a veteran of many market declines. And what I have seen is that very often when a new bull market starts, you will have new leaders. And my aim for your portfolio is to be in those leaders. So with that, I bid you goodbye for this month. Just a beautiful line by Buffett, which says that be greedy when others are fearful. Fear is max, at least do not panic. And if you do have some freedom to be greedy, I think you must allocate something, because very often the returns that you get from such inflection points in a few years down the line are phenomenal. With that, I'll leave you and thank you very much. As I said that it's been a difficult month, times are difficult, but rest assured we are extremely focused on your portfolio. The objective today or has been to lose less, which we think we've done a decent job, though obviously, as I said, it's always painful to lose money. But what I am focusing on right now is the opportunities that are going ahead, because as and when markets turn, I feel that new sectors, new themes are coming. We are sitting in cash. We are already reallocating, just as we think pharma is going to be a bigger theme. And today it is the second highest weightage in our portfolio. All additions have been done there. And going ahead, we will keep doing such adjustments. More importantly, be able to participate and recover and make money for you in the times to come. So take care, stay safe, and fingers crossed.